Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. Joining us now on this leg of the show is Gaurang Shah, the Assistant VP at Geojit BNP Paribas. Mr. Shah, it's always a pleasure to have you on All About Stocks. Now, before we talk about the questions that viewers have sent in during the week, there is another political hot potato in Delhi that I want to ask you about. We see the government find itself in a fix again, with Sharad Pawar, Praful Patel putting in their resignations. They seem to be upset with the way things are going in Delhi. But just at a time when we thought that reforms would be on their way in, there seems to be trouble again with the alliances in Delhi. Tell me, how long do you think this is going to take to sort out? Will we see reform in the near future?
I think it's going to be a very difficult walk for the Congress. And let us not forget that NCP was the only ally which stood by each and every decision of the Congress, barring the noise that we heard from time and off from TMC or from Samajwadi Party. Having said that, I think it is rather unfortunate. I am of an opinion that these reforms, the so-called reforms which we up till now were only hearing in form of words, will be equally more difficult to implement or take any decisive action going forward from here on. So earlier it was presidential election, now we are talking about 15th of August, then we'll talk about monsoons, then we'll talk about New Year, etc., and soon we'll be in 2014 when we'll have the general elections. And I would not be surprised if things get a little bit more uglier. I think the elections could be anytime soon rather than later.
Right, so while we know that Mr. Pawar was one of the allies who was very pro-reform himself in the last few years, it's possibly going to take some time to sort that out. And as far as the monsoon is concerned, from your research desk, what are you seeing right now, and what do you expect will play out?
As we speak, we are, I guess, somewhere close to about 22 or 23%. Large part of it is in the northeast or northwest belt, I beg your pardon, and the western Maharashtra and the central India. I am of an opinion that this could propel the agri-commodity prices much more on a higher level, and already on the street we have seen the prices go up. This will start contributing on the higher level to the inflation, which again leaves very much less elbow room for the Reserve Bank of India to do any kind of interest rate cut on 31st of July.
Let's move on now to our portfolio segment. Now, every week we pick the portfolio of one lucky viewer, and our guest takes a look at your entire gamut of stocks and tells you what you should be holding or selling depending on your time horizon. This week, our lucky viewer, Gaurang, is Ram Krishna Singh. He tells us he has a time horizon of 3 years, which is always pleasant to hear. He wants to know which of his stocks he should hold on to. The first on his list is Bharti Airtel, which he bought at 337. We've heard some positive news come out of Bharti Airtel. There is some confidence also about our African business as well. What's your call on Bharti Airtel? Continue to hold on to it?
Yeah, definitely continue to hold on, and the level that he bought it at 337, I think the downside is very much protected. And in case if he's got additional investable capital, I think we should definitely add on to Bharti Airtel at maybe somewhere close to about 300 or 310, some of those levels. As a disclosure, we have a positive call on Bharti Airtel, and our 12 to 16 months time horizon, the target is about 400. And as you rightly mentioned, I think the issues in terms of overseas operations are going to fade away as we go forward from here on, and will start contributing to the bottom line.
Next on his list is GAIL, which he bought at 484 rupees, ended the week at 355. He seems to have made some losses there. What's your call on GAIL?
Sub 330 levels, I would definitely advise him to average, because his investment initial is about 480 plus. Wherein again your upside gets capped, because you will not see any magical moves happening in the near future if you're thinking about 3 to 6 months or even a 1 year time horizon. So you've got to give a time horizon about 16 months plus, and we see a decent return coming to the investment. But it's most important thing that we should average sub 330 levels.
Alright, next is ITC, which you bought at 204. It's ended the week at 253. I want to know what's your call on ITC. Also, interestingly, this week the Maharashtra government banned the sale of gudka and pan masala. It's taking a strong view on tobacco. Do you think that in any way now government's becoming a little more stronger as far as the consumption of tobacco is concerned, should be causing a company like ITC some concern?
For ITC, I don't think so, because it is nowhere having a large exposure to this pan masala gudka segment, and they have a larger contribution coming in from cigarettes, and most of the brands are doing very, very well. As a disclosure again over here, we have a buy recommendation, and our target is about 275 to 280. The only spoil sport for the entire FMCG sector would be the deficit train, because large part of their inputs are in form of agri commodities. And in case if those commodity prices go up, their margins start shrinking. But overall, I think we still hold our view or price target about 275 to 280 from our 12 months to 16 months time ahead.
Alright, so we're holding those first three stocks. Kingfisher Airlines bought at 52 rupees. That ended the week at 10 rupees. There seems to be less and less hope for Kingfisher Airlines with every passing week. Would you say it's time for him to cut his losses?
I think this is a classic case. You need to take remedial action in case if you see your capital getting eroded to this extent. I think you need to take some remediation in time before, large part of your capital is wiped out. So this particular stock, no-brainer. I think it's a sell ASAP, that is as soon as possible.
Right, I'm going to quickly go through the other three because they're all power stocks. There's Power Grid, REC and Reliance Power that he has. He seems to be making losses on all three of them nearly. Would you recommend he hold on to all three?
Very near to our target price of 115, Power Grid I'm talking about. So here if he wants, he can hold on, wait for 115. But again, the markets are not going anywhere, and if the stock market has to react, the stock will. So it's up to you. If you want to book profits, you can book profits. Otherwise, hold on to it. REC, again, a stock which has been bought at a higher level, if I'm not mistaken. But the power distribution side, we are very comfortable, and in this particular company, REC has got a fair amount of presence. So hold on to it. Lower levels you can average. Reliance Power is an outright sell, and with yesterday's, I think, development on imposing duty on Chinese power equipment, Reliance Power, I'm given to understand, has a large part of their equipment coming in from China. That will again push up their initial cost to a higher level. So, and of course, as a disclosure, we do have a sell recommendation or a reduced recommendation on Reliance Power.
All right. And I want to quickly ask you, when you look at his entire portfolio, he doesn't seem to have any exposure to banking. Would you recommend that he put some banking in there to get a little diversification?
Very prudent question over here, and my advice to him is that all those recommendations wherein I have told him to either sell or switch, my advice over here would be a private sector bank, and as always, a disclosure, we are biased towards private sector banks, especially banks like ICICI and Axis, Yes Bank and IndusInd Bank. So given the kind of damage he's taken and the capital that he'll get back after selling these particular stocks, my advice is that he could possibly look at buying Yes Bank or an IndusInd Bank.
Alright, we hope that helps, Mr. Singh. Do write back to us if you need any more help. Remember, if you'd like your portfolio looked at, send it to us. There's an email ID at the bottom of your screen. Gaurang, before I move on to your recommendation for this week, I have to pull up your report card from last time when you recommended Kane when it was trading at 360 with a target of 435. The market price of that stock currently is 326. Now, we know that Kane has also said that it can increase its Rajasthan field production by 70%, of course, assuming that ONGC gives them the investments and the approvals from the government. But what's your call right now on Kane? Are you standing by that buy call?
I strongly stand by it, and if somebody's missed the bus, I guess it's the perfect opportunity to buy the stock. Even in the worst time, this particular stock has seen consolidation about 300 levels or 310 levels, hardly gone below those levels, has managed to bounce back. And not only on the domestic front, on the Rajasthan block, they are increasing their geographical reach to the nearby countries. And the company also mentioned that they are willing to start investing huge sums of amount in exploration activities. And in case if that per day output is given a green signal, then you will see a bump of almost about 25,000 barrels per day output increasing, which will again translate into good top line numbers and revenue. So it's a stock which needs the patience, but again, the downside is protected, so I strongly recommend a hold over here. And if somebody wants to have an initiative buy, one can definitely do that.
All right, good time now to pick up Kane. We're going to move on to your recommendations for this week. Gaurang's pick for this week is Glaxo Pharmaceuticals. Take a look.
Glaxo Pharmaceuticals was established in India in 1924 and is one of the country's oldest pharmaceutical companies. Glaxo's products include prescription medicines for dermatology, gynecology, oncology, and cardiovascular ailments. It also offers a range of vaccines for hepatitis, chickenpox, and cervical cancer. But despite the wide range of products, the company reported first quarter earnings below market estimates. Disappointing sales and a drop in operating margins led to a 38% drop in net profit, which has been on a decline for the past few quarters. One of the key concerns for business is the weakening rupee. Glaxo imports about a quarter of its raw material needs, and if the rupee weakens any further, the company's already low margins may take a severe hit. Also, a new pricing policy in the drug industry could hurt the company's potential for growth.
All right, Glaxo Pharmaceuticals. Gaurang, now pharma is not a business that retail investors find easy to understand. So take us through this company in particular. If I were to buy it now as a retail investor, what triggers should I keep in mind for the company and for the stock?
Now, traditionally, we've seen that pharma over the last 3 to 6 months have been a steady performer, and you've seen incremental upside in this particular mid-cap pharma category. Especially when you look at an MNC pharma like a Glaxo, your downside is very much protected. The company is cash rich. The parent is concentrating. Of course, there were recently news about the parent company having some legal issues in the overseas market, but that's to do with the parent company. There's nothing to do with the Indian outfit. Over here, we feel that the number of product lineup and the market share is consistently and steadily going up. I'm of an opinion that this particular stock for a retail investor could turn out to be a very good one in terms of return, and from a 12 to 16 months time horizon, we are looking at a target of about 2,430.
Alright, now my concerns here, there are several research firms who have been looking at everything that's been written about this stock. A lot of them have a sell call on the stock right now. There's concerns over sliding sales over the last couple of quarters, lower margins. There's a currency impact on the company as well. It has to import a lot of its raw materials. And of course, the drug price control order. Now, for those of our viewers who don't know, there's a new order that's expected to come in. It will limit the price that companies like Glaxo can charge for certain commonly used drugs. Now, Glaxo in particular, nearly a third of its sales comes from drugs that will be impacted by this particular order. So, none of these things are causing you concern right now as far as recommending the stock?
Now, if the prices are controlled, more affordability, and we are talking about volume growth and a volume boost over here. Of course, you might have an initial knee-jerk reaction. That's not ruling out from here. But over a long term, I'm talking about 15 to 16 months, I think you will see tremendous boost coming in from the top line because of the price control. Margins will be impacted to a certain extent, but that will be compensated by the volume growth. So you will have a decent profitability coming in. Whereas on the other side, you spoke about imports that they will have to do rupee-dollar equation. I think the parent company has taken very well good care of it, and the company is cash rich. Most of the positions in terms of forex are already hedged. So you don't have to worry in terms of huge losses coming in from that particular angle.
Alright, last question before we take a break. Normally pharma stocks are defensive stocks. Can this be the defensive stock in my portfolio?
Pharma, I believe, it's my opinion, of course, it can differ from person to person, but pharma and FMCG are no more defensive. Let me be very, very clear. They are more of value creator in your portfolio. And along with Glaxo Pharma, let me just give you a couple of other names that we have recently come out. Of course, because Glaxo is quoting at about 2,000 plus, so you cannot afford to go and buy a large number of quantity in terms of shares. So we have a positive view on Glaxo, we have a positive view on Cipla, we have a positive view on Glenmark, and two stocks which made a new 52-week high along with Glenmark, Divi's Laboratories and Strides Lab. We have a host of buy recommendation in the mid-cap pharma.
Alright, pharma stocks there. Creating value, not exactly being defensive stocks in your portfolio. That was Gaurang's recommendation of the week, Glaxo Pharmaceuticals. Quick break. On the other side, we'll answer more stock questions that you've been sending in through the week. Don't go anywhere.